Did you know that nearly 40% of Americans can't cover a $400 emergency expense? This is despite the fact that the average household income in the U.S. is over $68,000 a year. It makes you wonder, where's all the money going? Let's dive deeper. The cost of living has been steadily increasing, but wages have not kept pace. Housing, healthcare, education, and even groceries are more expensive than ever before. This disparity between income and expenses is a significant reason why so many people are struggling to save. Let's talk about credit cards. The average American has over $6,000 in credit card debt. Even more surprising, many people don't realize that making only the minimum payment each month can keep them in debt for decades. Credit card companies often charge high interest rates, sometimes over 20%, which can turn a small balance into a massive financial burden. Imagine paying for a $1,000 purchase over the next 20 years and ending up paying double or even triple the original amount. Student loans are another shocking topic. The total student loan debt in the U.S. is over $1.7 trillion. That's more than the GDP of many countries. Some graduates are paying off their loans well into their 40s and 50s. What's even more alarming is that many borrowers are unable to make significant dents in their balances due to interest accrual. Some are even in default, facing wage garnishments and ruined credit scores. Ever heard of lifestyle inflation? It's the tendency to increase spending as income rises. It's a major reason why people making six figures can still feel like they're living paycheck to paycheck. When you get a raise, it can be tempting to upgrade your lifestyle, a bigger house, a nicer car, more dining out. However, if you're not careful, these expenses can quickly consume your extra income, leaving you no better off than before. Let's talk about retirement. Nearly half of Americans have no retirement savings at all. Even among those who do, many are not saving nearly enough to maintain their standard of living in retirement. The recommended savings goal is often cited as at least $1 million, but the average retirement savings for Americans aged 55 to 64 is only about $120,000. This shortfall could lead to a significant drop in quality of life during retirement or force people to continue working well into their golden years. But there's more to consider. Healthcare costs in retirement can be substantial. Medicare doesn't cover everything, and long-term care can deplete savings rapidly. It's essential to plan for these potential expenses, but many people underestimate them. Another shocking fact, financial literacy is lacking. A study found that 2/3 of Americans could not pass a basic financial literacy test. This lack of knowledge can lead to poor financial decisions, such as taking on too much debt, not saving for emergencies, or investing in risky ventures without understanding the risks. Let's not forget about the wealth gap. The top 1% of Americans hold more wealth than the bottom 90% combined. This disparity has been growing over the past few decades, leading to significant social and economic implications. The middle class is shrinking, and economic mobility is declining, making it harder for people to improve their financial situation. Here's another eye-opener. The average cost of raising a child in the U.S. to age 18 is over $233,000. This doesn't include college tuition. With these high costs, it's no wonder families are feeling the financial strain. Childcare, education, healthcare, and extracurricular activities can add up quickly, putting pressure on parents to manage their finances carefully. Let's also talk about the gig economy. More people are turning to gig work for additional income, but this type of work often lacks benefits like health insurance, retirement plans, and job security. While it can provide flexibility and extra cash, it also comes with its own set of financial challenges. Finally, let's touch on the psychology of money. Many people have a complicated relationship with money, influenced by their upbringing, societal norms, and personal experiences. Financial stress can lead to anxiety, depression, and strained relationships. Understanding and addressing these psychological aspects is crucial for financial well-being. Finance can be full of surprises, but understanding these shocking facts is the first step towards making better financial decisions. By being aware of these issues, you can take proactive steps to improve your financial health and secure a better future for yourself and your loved ones.